Very good morning, my dear friends. We are in the chapter accounting for reconstruction of companies. That is the main topic. In that, we are at internal reconstruction chapter. I think so. This is the final session for internal reconstruction because in our time slot, we need to cover one more chapter, which is liquidation of companies, which is also one of the bigger chapter. It may take around 3 sessions. So before continuing with the problem where we left in the last session, first let me give a quick recap till now what we have discussed in this chapter. So the process of internal reconstruction is nothing but the entire restructuring of the existing financial statements. Am I right? Such a restructuring is going to occur with liquidation or without liquidation. Such a restructuring of financial statements will occur without liquidation of existing company. So then during the process of internal reconstruction, really what happens? Revaluation of assets going to occur, then reassessment of liabilities may occur, reduction of paid up value may happen. We may do certain compounding activities either with the creditors or debentures or the bank loan parties or the shareholders, whatever the case may be. All such activities are in generally occur as a form part of internal reconstruction. And before discussing the accounting treatment, I also discussed in very basic mode before the conducting of internal reconstruction by a company. That is before conducting of a typical internal reconstruction, what happened in the outside. So the scheme is in generally designed, that is known as scheme. The scheme is in generally designed by the board of directors after a conclusion of so many board of directors meetings. Then such scheme is first of all approved by the various parties after conducting of the meetings with shareholders, creditors, bank loan parties, and such all other parties. Then such scheme is ultimately sent to the approval for NCLT, which is National Company Law Tribunal. Then after getting approval from the NCLT, then the company may start the internal reconstruction procedure. Then after completion of internal reconstruction procedure, if the court decides to add the word and reduced, then at the time of preparation of financial statement, it should need to add the word and reduced. Such all things I discussed in the last class. So then coming to methods of internal reconstruction. So alteration of share capital, one is related to, alteration of share capital, and another one is variation of shareholders' rights, and the other one is reduction of share capital, and another one is compromise and arrangement, except the surrender of shares. All these things were discussed by me. Am I right, guys? Hope I discussed all except surrender of shares. Just let me open that. Alteration, variation of shareholder size, reduction of share capital, compromise and arrangement. Except this, everything was discussed. Sir, in case of alteration of share capital, section 61 deals, before altering the existing equity share capital, there should be provision in articles of association should be mandatory, and ordinary resolution should be passed in the general meeting, that is for the purpose of getting approval by the shareholders. In alteration of share capital, increase in authorized share capital is possible, subdivision or consolidation is possible, conversion of shares into stock or stock into shares also possible. Sir, what is the accounting treatment, which journal entries we need to pass? All such stuff I already discussed. That's why I don't want to take any further in this class. Next, come to variation of shareholders' rights, deals with section 48. So the right may be with respect to dividend or the voting. Such a right may going to impact. That is to put it in the simple mode, that is cumulative to non-cumulative, participative to non-participative, 10% is preference shares to 5% is preference shares. Like that, there may be a scope of change of right. Sir, then with respect to dividend means, I already told you, just 10% to 5% is the change in dividend. Okay. Change in dividend with respect to equity shares also is possible. That is from class A equity shares to class B equity shares, or class B equity shares to class A equity shares. Such type of variation is also possible. Then But for alteration of share capital and variation of shareholders right, either capital reduction account or reconstruction account doesn't coming into the picture. Next, in case of reduction of share capital, which is altogether different from alteration of share capital, Section 66 deals with reduction of share capital. Whenever a company can go for reduction of share capital, NCLT approval should be mandatory and the special resolution should need to pass by conducting a general meeting. Because here the shareholders' rights, the primary right is going to be impacted, as well as the company is also going to impact due to reduction of share capital. That is the reason why both NCLT approval and special resolution required. So the reduction is going to occur in three ways. That is simply by conversion of partly paid up shares into the fully paid up shares. That is the uncalled portion out of the face value. We need to cancel straight away. Okay. So there I gave a clear example. Here the face value was 10 rupees, paid up value was 7.5. Now the 7.5 paid up value, which is partly paid up value, I'm going to convert into a fully paid up value. So that's why face value 10 rupees we are going to cancel. The face value 7.5 rupees we are going to make it credit. There is no change in the total paid up value, which is 7,500. Next, reduction through payment to shareholders. Payment to shareholders means the money which is not at all useful, now we are paying to the shareholders, due to which the existing paid up value may decreased. Am I right? For that also I given the example, which is the casual reduction of share capital through payment of the paid up value. Next, come to reduction through cancellation of the paid up value. That is something will be sacrificed by the shareholder. Such reduction may happen in two ways. One is reduction in paid up value, but not in face value. Another one is reduction in paid up value as well as face value. So unless otherwise specifically mentioned that the reduction is reduction in paid up value but not in face value, we are in generally assume that the reduction was happened in paid up value as well as face value. I clearly told you, that is, for example, the existing equity share face value is 10 rupees. Now out of the 10 rupees, if the equity shareholder is ready to sacrifice to the extent of 2 rupees, let us assume, then what I can assume that there is a reduction in face value as well as paid up value. That means the new equity shares were 8 rupees face value as well as 8 rupees paid up value. But if something is given clearly that there is only reduction in paid up value but not in face value, then at that point of time you should not cancel the face value. You can only decrease the paid up value by putting the entry equity share capital account to capital reduction account. The existing face value you should not disturb. You no need to disturb. Fine. Next, come to compromise and arrangement. It deals with section 240 to 250 of the Companies Act 2013. So either compromise or arrangement is an agreement entered between company and the other party. The other party may be the shareholder or other liability holder. The agreement is for the purpose of sacrifice out of the amount outstanding from the company. Maybe something will be waived off by the other party. If such agreement is dealing with such waive off or such sacrifice, then such agreement is technically known as compromise or arrangement. But to speak conceptually, compromise and arrangement both are different words. In case of compromise, initially dispute is occurring in between the parties. At later point of time, after completion of so much of negotiations, they might agree. In case of arrangement, there is no dispute at all. Straight away, they are agree with terms and conditions to each other. Am I right? Different examples also I given. Sir, in case of compromise and arrangement and reduction of share capital, reconstruction account or capital reduction account coming into the picture. That point you should need to put in your mind. And in entire problems are the problem content, most of the content is try to cover the concept of compromise and arrangement. We already seen that through problem number 3 as well. Just for a good understanding, just the examples, just I want to revise, because the concept which you clarified from such examples is much more useful while resolving the problems. Okay. So creditors worth was 10 lakh here is there. Creditors ready to sacrifice their 50% of the claim. Remaining we are paying through equity shares. Then the amount which they are going to ready to sacrifice, we are straight away transferred to reconstruction. The remaining amount of 50% we need to issue equity shares. So entry creditors 10 lakh, to reconstruction 5 lakh, to equity share capital 5 lakh. Am I right? So the same thing, creditors ready to sacrifice 50% of the claim, that is 5 lakhs, provided company will issue 2 lakhs worth of equity shares. then you need to check the gross sacrifice and the net sacrifice. The gross sacrifice amount was 5 lakhs. I too agree. But in addition to sacrifice something, they are expecting 2 lakhs worth of equity shares. That way, the net sacrifice amount will be 3 lakhs only. So for the remaining 50%, out of 10 lakhs, now he is discussing about 50%, right? For the remaining 50%, they are expecting the cash immediately. Then what is the journal entry, sir? First, you need to cancel the entire creditors account first, which is creditors account 10 lakhs. To the extent of net sacrifice, 3 lakhs, you can make it sent to reconstruction account. For the remaining 2 lakhs, they're expecting the equity shares. To equity share capital, you can put 2 lakhs. Now, for the remaining 5 lakhs, they're expecting the cash. That's why 2 cash, 5 lakhs. This is the entry we need to pass. Creditors, 2 cash, to reconstruction, to equity share capital. Hope you understand the base concept. So how much net amount sacrificed by the equity shareholder you need to check, that amount only you should need to transfer to reconstruction. Remaining in which form they are paying, just you can make it credit to that particular aspect. Next, I discussed the concept of unrecorded liability and unrecorded asset. Which conclusion we made? Unrecorded liability means most of the times in the problem they are discussing about arrears of cumulative preference dividend. The conclusion what we made was how much amount we are settling to unrecorded liability, we should need to pass one entry. That is reconstruction account at R2, cash or equity share capital or preference share capital or debentures, what we are settling. That is to the extent of settlement value. Sir, the entire unrecorded liability is waive off means nothing we are settling. That's why no entry. Am I right, guys? All of you. That point only you can remember. The same conclusion I given here. If unrecorded liability is settled at book value or greater than book value or less than book value, entry doesn't change and the amount is the settlement value. Entry doesn't change means what is such entry? Reconstruction account at R2, cash or equity share capital, preference share capital or debentures. Then we also discussed certain important points. The important points were in case of alteration of variation of shareholders, right? Reconstruction account doesn't impact. Only in case of reduction of capital, compromise and arrangements, only reconstruction account is going to impact. Sir, balance in reconstruction account should be applied to set off the P&L account debit balance, whether it was mentioned in the problem or not. After that, still if any balance is there under reconstruction account, we need to transfer to capital reserve account. I also told this point as well. Sir, if the balance in reconstruction account is not enough to set up the P&L debit balance, then what I should need to do, sir? You can use the other reserves. If such other reserves are also not used for not exist, then to the extent of balance of reconstruction amount only, you can knock off with the P&L account debit balance. The remaining P&L account debit balance is going to continue in the balance sheet after completion of reconstruction. Next, sir, any intangible assets and other unrepresented assets specifically mentioned in the problem that to cancel with the reconstruction account, then you can cancel. Otherwise, don't cancel it, simply ignore. If it is specifically mentioned, then only we can go for cancellation with the reconstruction account. At the time of preparation of balance sheet, we should need to use the word unreduced if court may order. Next, revaluation of asset concept I clearly told. That's it, guys. This is the concept we discussed in the last class. Then we started discussing problem number 3, I think so. If I am right. Can you please tell me, all of you guys, put your thumbnails. Is it concept clear, guys? Sir, what will happen to that reconstruction account balance? Guys, the balance under reconstruction account is used to set off the P&L account debit balance. Still, if balance is there under reconstruction account, we should need to transfer to capital reserve. The objective of internal reconstruction itself is to knock off the P&L account debit balance. Do you understand? Fine. That is the one question actually they are asking. Pooja is asking one question, but as per the Companies Act, dividend payment is not mandatory. So why do we say that arrears of dividend is a liability, sir? It's a good question, actually, Pooja. Sir, the company is in the process of internal reconstruction. The company is in the process of internal reconstruction means what the company will decide what are all the future obligations it have, including the contingent liability. Arrears of preference dividend, you can call it as a contingent liability. For the timing, that is also not a contingent liability. The reason is if we have the profits, we need to pay. Otherwise, no need to pay. It is also not a contingent liability. Okay, sorry, I'm take back my words. Just it is a line item we are going to show under the one of the notes to accounts. But during the process of internal reconstruction, we are making negotiations with each and every party. That's why we are considering that aspect is also into the picture, and just we want to make it settle with the preference shareholders. That is the reason why we are treating the arrears of cumulative preference dividend as a liability. Otherwise, it is not at all a liability. Fine. That's it, guys. Someone is asking a query related to amalgamation. I don't want to discuss right now. Okay. Still, so much I need to cover here. If time permits, at the end, I'll resolve that query. Or you can make it through mail ID as well. Okay. Actually, I forgot to give my mail ID, guys. If you have any queries, you can reach out to me through mail. So my mail ID is casatyaraju2016@gmail.com. So you may expect the answers maybe within 2 to 3 days. Okay, within 2 to 3 days. I can't give the instant answers. The reason is I am checking this mailbox 48 hours once, like that. Okay, very occasionally I'm checking. That is the reason. Fine. Come back. We are in problem number 3. Let me read problem number 3 to continue my flow. So the balance sheet of A&D Company Limited as on 31st December 2011 is as follows. Freehold property was given, plant was given, patent, goodwill, trade investment. Under current assets, trade receivables was given, inventory, profit and loss account, if you are observing, having debit balance. Sir, P&L account was shown under asset side, means that is indirectly they are conveying that which is a loss making company. Am I right? Further liabilities, share capital, 6% cumulative preference shares are there. Equity share capital is there. Debentures secured on the freehold property. They are clearly given that these debentures are secured on freehold property, means if you are realizing any cash flows from the freehold property, first you should need to utilize to make repayment to debenture holders. That is the meaning of security. Am I right? Fine. Next, accrued interest on such 6% debentures also given. Then current liabilities, bank OD, trade payables, directors loans were given. Next, the court approved a scheme of reorganization to take effect on 1/1/2012, whereby unless otherwise court approval doesn't come into the picture, we unable to start the internal reconstruction process. That's why before starting the entire internal reconstruction procedure or the accounting treatment, first we should need to get court approval. So what is the scheme? Which scheme actually the court approved? They were given the below. Then what they ultimately asked, you are requested to show the journal entries reflecting the above transactions, including the cash transactions, and prepare the balance sheet of the company after completion of the scheme. So two activities we need to do. One is journal entries, another one is balance sheet after completion of internal reconstruction. The further information, the preference shares to be written down to 75 rupees each and equity shares to 2 rupees each. Can you please tell me, guys, all of you, preference shares are written down to 75 rupees each, means 25 rupees we need to make a transfer to internal reconstruction per share. Here 8 rupees we should need to make a transfer to internal reconstruction per share. Am I right or wrong? Next, of the preference share dividend which are in arrears for 4 years, 3/4 to be waived and equity shares of rupees 2 rupees each to be allotted for the remaining quarter. So which the thing is related to unrecorded liability. Okay, first let me finish the point number 1, journal entry, then I'll discuss about the point number 2. We already wrote the journal entry, just I'll show here. So equity share 8 rupees we need to transfer to internal reconstruction, means how many number of equity shares are there? 75,000 equity shares are there. 75,000 multiplied with 8, you need to make a transfer to reconstruction, which is 6 lakhs. So the remaining, just you can make it convert into 2 rupees equity share. Sir, one more thing you need to observe here. If 8 rupees is sacrificed and equity shares are converted into 2 rupees each, means there is a reduction in paid up value as well as face value. Earlier, the face value was 10 rupees. Right now, the face value was 2 rupees. So that is the point I clearly mentioned. Even though they are not specifically mentioned that there is a reduction in paid up value and face value both, sir. Still, we need to assume there is a reduction in face value as well as paid up value. That is all about reduction of equity share capital. Hope you understand. Next, come to the preference share capital in the similar mode. 25 rupees, we need to make it transfer to reconstruction, means 25 rupees multiplied with number of preference shares, 4,000. 25 into 4,000 means, 25 into 4,000 means 1 lakh. So that's why 1 lakh, they are transferred to reconstruction, remaining face value 100 to 75. 6% cumulative preference share capital amount was 3 lakhs. Next, coming to arrears of cumulative preference dividend, he is talking total outstanding amount of arrears of cumulative preference dividend for 4 years. Am I right? Arrears for 4 years. Per year, how much, guys? Per year, which is 4 lakh into 6%, which was 24,000. So 4 years means 4 into 24,000, out of which they were clearly told that 3/4 were waive off. 3/4 to be waive off. 3/4 to be waive off. Sir, for unrecorded liability, if we are making waive off, then no entry. Am I right? Remaining 1/4, what we are doing? We are allotting the equity shares. How much you are settling? For that only, you should need to pass the entry reconstruction to equity share capital here. That is the entry we need to pass. Next, coming to the next aspect, accrued interest on debentures to be paid in cash. How much accrued interest is there here? 22,500. Accrued interest to bank account. This is normal entry. That is reconstruction account. Not at all involved here. Just we are paying the accrued interest. Next, we discussed point number 4. Lot of implications are there in point number 4, and which is the heart for the entire problem as well. What is the problem is all about? Debenture holders agreed to take over freehold property book value 1 lakh at a valuation of rupees 1,20,000. So don't think simultaneously from both the parties ends. First, to take one party, complete the entire party transactions, then you can switch over to the another party. Now first I will take it into consideration, that is freehold property side. Sir, freehold property in the books of accounts, how much was given here? Which was given for 4,25,000. The same thing I considered here. What they are trying to tell here, sir, 1 lakh face value of the freehold property is taken over by the debentures at the rate of 1,20,000. That means, first of all, upward revaluation of freehold property was possible. So 1 lakh, we are revalued into 1,20,000 means, so 20,000 upward revaluation is there. That is freehold property accounted to reconstruction account to the extent of 20,000. So then what about the remaining freehold property? 4,25,000 minus 1 lakh means remaining freehold property was 3,25,000. In further, it was clearly given that where in point number 8, remaining freehold property to be revalued at 3,87,500. For 3,25,000, if they revalued at 3,87,500 means upward revaluation again happened 62,500. Here 20,000, here 62,500, total 82,500 upward revaluation was happened. That's why I made only single entry freehold property to reconstruction, which is for 82,500. Do you agree all of you this point? Next, now coming to debenture holders point of view, now the total amount payable to debenture holders were 3,75,000. That's why I considered 6% debentures for 3,75,000. Out of such 3,75,000, now we are issuing 1,20,000 worth of freehold property to the debenture holders. You can issue the freehold property of 1,20,000, then cancel the 6% debentures with 1,20,000. Also freehold property just out from the organization, that's where 2 freehold property account. So what about the balance of 6% debentures, sir? Still it is there in the organization. If nothing is mentioned means we are showing it as a liability at the time of preparation of balance sheet after completion of reconstruction. Next, come down guys, come to point number 5. Patents and goodwill to be write off. Sir, whenever they are telling something about the write off, don't write n number of entries. For all the transactions for which we need to make it write off, we can adjust through a single journal entry. You can habituate that point also in the examination to save your time. Okay, next, inventory to be written off by 65,000. This is also something related to written off. Next, amount of 68,500 to be provided for bad debts. Bad debts means decreasing the debtors. This is also written off of the one of the asset only. Next, we already completed point number 8. trade investment be sold for 1,40,000. So trade investments in books, how much we have actually? 55,000. 55,000 trade investments were sold for 1,40,000. How much profit, guys? Profit was 85,000, right? So the entry bank account at R2, trade investments to reconstruction, which is the journal entry for point number 9, which is a common journal entry. In the normal course, if you are getting any profit, you might transfer to P&L, but we are in the process of internal reconstruction. That's why any profit or loss we derived, we may transfer to reconstruction account only. Next, come to point number 10. Directors to accept settlement of their loans as to 90% thereof by allotment of equity shares of rupees 2 each and 5% in cash and balance 5% being waived. First of all, in balance sheet, directors loan, how much amount is there? 1 lakh. Out of 1 lakh, they are clearly given that 90% is through issue of equity shares, 5% through payment of cash, remaining 5% is waive off. Waive off will be transferred to reconstruction. This is to cash, this is to equity share capital. That's why the entry was directors loan to equity share capital, to cash and to reconstruction. Do you agree, guys? All these points I already discussed in the last class itself. Next, come down. Point number 11. There were capital commitments totaling 2,50,000. What is the meaning of capital commitments, sir? Capital commitments means we already entered into certain agreements or the contracts with the outside parties to ensure certain works. That means in that particular agreement, they also clearly mentioned that if we are unable to execute such works, we need to pay the penalties as well. Do you understand? Now, for these capital commitments, now our company decided to cancel because maybe such contracts are not feasible to us right now due to our existing financial situation. That's why we are ready to lose such contracts. That's why we are canceling such contracts on payment of 5% of the contract price as penalty. That means, sir, you may have a doubt that why, sir, you are paying the penalty rather than paying the penalty. It is better to execute now. At least if we are canceling the contracts, the only expenditure was 5% as penalty. But if you execute the contract, if we are getting the losses for more than 5%, then only people will go for the cancellation. For example, if you are continuing the contract, you may end up with 25% loss. Then it is better to cancel the contract. Nah? Do you understand my point here? So that's why the companies decided to cancel the contract by paying the penalty. Now, due to this transaction, the one and only expenditure was penalty amount. That is 2,50,000 into 5%. How much, guys? 12,500. Then what is the general entry, sir? Penalty is an expense. Normal entry, penalty to bank. In normal course, penalty will be closed and transferred to P&L. That is P&L to penalty. But during the process of internal reconstruction, any expense or income, we should need to make a transfer to reconstruction account only. That is reconstruction account at R2 penalty. Penalty cancelled. The net entry was reconstruction account at R2 bank account. Do you understand, all of you? The normal entry, penalty to bank, then reconstruction to penalty cancel with each other. Then the entry was reconstruction to bank account. Just let me write this, which is 10th entry, right? Entry number 10, reconstruction account at R to cash or bank account. Both are same. There is no difference. 12,500. Next, ignore taxation and cost of the scheme. Okay. Except these points 5, 6, 7. Everything we done. Right? Now, guys, all of you, can you please check before proceeding with point number 5, 6, and 7? First, let me check the balance in reconstruction account. All of you, please start with your calculator. Actually, we need to open a reconstruction account. Just for understanding purpose, I am telling you, they are not asking. That's why I'm not opening. But this is the first problem you are come acrossing. That's for just I'm opened the reconstruction account. Concentrate, all of you. So please give the postings for the reconstruction. I will tell you this process in two ways. With opening of reconstruction, how we can proceed, or without opening of reconstruction also, how we can proceed, I will tell you. But first of all, in the first instance, just I opened the reconstruction account. Please follow my flow. After that, without opening of reconstruction account also, how we can be able to complete the problem, I will tell you. In first entry, reconstruction account was involved Equity share capital to reconstruction means in reconstruction by equity share capital 6 lakhs, right? By equity share capital 6 lakhs, which was 6 lakhs. Next, come to second entry, guys, all of you. In entry number 2, 6% cumulative preference share capital to reconstruction 1 lakh is there. So here 6% is cumulative preference share capital 1 lakh is there. Next, come to third entry. Is there any impact, guys? Reconstruction to equity share capital. So 24,000. In reconstruction to equity share capital 24,000. Come to fourth entry. Is there any impact of reconstruction? In entry number 4, freehold property to reconstruction account 82,500. Freehold property 82,500. So come to fifth entry, guys, all of you. Just a second. Fourth entry, there is no reconstruction. That's why I ignored. Just now I completed fifth entry. Now you can come to sixth entry. Sorry, sixth entry. Please, all of you come to sixth entry. In sixth entry, 6% debentures to freehold property. There is no involvement of reconstruction account. Come to seventh entry. Seventh entry also, there is no involvement of reconstruction. Eighth entry, bank to reconstruction 85,000. In reconstruction by bank 85,000. Fine. What will be the next item? 9. Come to the 9. Director's loan to reconstruction 5,000 is there. In reconstruction, director's loan 5,000 is there. Next, reconstruction to bank 12,500 is there. Reconstruction to bank 12,500 is there. Sir, before writing off any single asset, now if you check the reconstruction account, how much balance is available? Can you please participate, all of you guys? Quickly. I need the answers in the query box. Oh, so many doubts came here. Just a second. Sir, when to use capital reduction reserve and when to use reconstruction account? That is not a reserve. That is a capital reduction account. Both are same. Reconstruction account or capital reduction account, both are same. But if you want to use the capital reduction, if you want spell like that, throughout the problem, use the capital reduction. In some entry, capital reduction. In the other entry, reconstruction. Don't use like that. If you want to use the reconstruction account for the entire problem or use the capital reduction account for the entire problem. Choice is yours. Both are same. Hope your doubt is cleared, Anita. Next, Hiral, sir, why we don't pass entry by paying cash to 1/4 of the preference dividend arrears? That is preference dividend debtor 2. I passed now for 1/4. For 1/4 preference dividend, arrears of preference dividend, reconstruction to equity share capital. Yes. Where arrears of preference dividend, they were clearly given that in point number 2. We are issuing equity shares, not cash. Okay. You are in the wrong mode, Hiral. I think so. Because which is an unrecorded liability. At the time of discharging the unrecorded liability, entry is reconstruction to cash or reconstruction to equity share capital. Okay. But you are telling the different entry. Please check that. Next, Rahul. Sir, why we debit reconstruction account in third entry? Just a second. Let me check what is the third entry. Guys, then what you are listening the unrecorded liability concept here, everyone is asking, what is the unrecorded liability concept? Where it is there? At the time of discharging the unrecorded liability, what is the entry we passed? Reconstruction account debtor 2, something. Conclusion also I told you, in the today's class, what conclusion I made? Sir, in case of unrecorded liability, if you are discharging something, it is at more than book value or less than book value or greater than book value. Entry doesn't change. Entry was reconstruction to cash or reconstruction to equity share capital. How it will occur, all such stuff I already discussed in the last class. First, if you want to record the unrecorded liability, reconstruction to unrecorded liability. At later point of time, unrecorded liability to that payment. Unrecorded liability cancel. Then the entry was reconstruction to cash or reconstruction to equity share capital. Like this, it will happen. Do you agree, guys? All of you? Okay, fine. Then, yes, Then let me know, first of all, how much is the balance under reconstruction account? All of you, someone is telling that reconstruction balance is 8,36,000. Can I proceed with 8,36,000? Let me cross check from my side as well. 6 lakhs plus 1 lakh plus 82,500 plus 85,000 plus 5,000 minus 24,000 minus 12,500. That's good. The balance was 8,36,000. Just till now. Till now. Now, we not yet completed point number 5, 6, 7. In point number 5, they are told that patents and goodwill to be write off. Sir, they were clearly mentioned that patents and goodwill to be write off, right? So that's why, can you please tell me, all of you, in the problem patents and goodwill, how much will be the balance? Patent was 37,500, goodwill was 1,30,000. So 37,500 we need to knock off, which is for patents. Then for goodwill, 1,30,000. Just for understanding purpose, I am telling you all such stuff. Next, apart from this, inventory to be written off by 65,000. So inventory also we should need to written off by 65,000. Next, one more is there. Amount of 68,500 to be provided for bad debts. So 68,500 provided for bad debts. Whether they will mention it or not, we need to knock off P&L account debit balance. P&L account debit balance was how much was given? 5,35,000. Which is P&L account balance. Now you can cross check, guys. What is the total? What is the total? 37,500 plus 1,30,000 plus 65,000 plus 68,500 plus 5,35,000. This total is also 8,36,000. What is the meaning of this? You know, the balance under reconstruction account is enough to knock off the entire P&L account debit balance. For example, after knock off the P&L account debit balance, if still something is there under the reconstruction account, for example, the reconstruction account balance is not 8,36,000, which was 9,36,000. Let us assume. Then the excess of 1 lakh, we should need to make it transfer to capital reserve. For example, no, sir, this is not the 9,36,000. This was only 8 lakhs, sir. That means we can make it knock off to the extent of this amount only for the P&L account balance. I mean, 36,000 is deficit now. That means out of 5,35,000, we can only knock off 4,99,000. To the extent of 36,000, we are unable to knock off. Do you understand what I am telling you? Sir, I can't tell the n number of problems, but I can create the n number of scenarios. Is it okay? So please pass the entry for this, all of you. That is entry number 11 or 12. 11. Okay. 11th entry, reconstruction account debtor. Reconstruction account debtor. Balance 8,36,000 to P&L. First, you can cancel the P&L, which was 5,35,000. 5,35,000. Then one by one, patents. Let me write here simply. 2 patents, 2 goodwill, 2 inventory. Okay, 2 debtors. That's it. P&L I already recorded. These are the amounts. Then the total will be equal to 8,36,000. If something balance is available, then we may need to transfer to capital reserve. Is it okay, guys, all of you? So this is the problem number 3. Let me check some more members actually made a certain queries. Sir, if in the problem, the fixed assets like P&L account debit balance and goodwill both is given, then we can directly write off without adjustment given separate. Can't understand. What's your doubt, ma? Hiral, I can't understand your doubt. Please come back. Karthik Gupta. Sir, can we conclude with reconstruction account as the gain or loss on realization of assets or liabilities on the basis of book values of the same is now to be calculated on the actual current values and transferred to reconstruction account? Yes, you can assume like that. It is also realization only. But one thing you should need to remember here. In case of amalgamation, most of the asset may be sold out by the liquidator. But in case of internal reconstruction, our company is not going to close. Our company is not going to liquidate for the assets which need to be adjustments. Such assets are liabilities only. We are taken into consideration. Okay, fine. Siddharth, what's your doubt, ma? Sir, debentures 1,20,000 we didn't add to reconstruction account. Where the debentures, yeah? Debentures 1,20,000 we are paying through freehold property, na? Where is the involvement of reconstruction account here? There is no involvement of reconstruction. For debenture holders, just we are giving the freehold property. Do you understand? That's why there is no involvement of reconstruction there. Absolutely. Fine. That's it, guys. Hope you understand, everyone. So that too, this is the first problem we are coming acrossing. That's why I spent much time. Okay, just let me proceed with some more problems. Then your understanding ability is improved much more. And before starting off this chapter itself, I clearly intimated to you, sir, how this chapter will look like now. Chapter is pretty much using conceptually, but understanding the content which was given in the problem may create confusion to the students. That's why please understand in the proper mode to complete the problem without hesitation. Okay, fine, come back. Let us see. Yeah, let us take problem number 4 itself. Why not? Given below is the summarized balance sheet of Rebuilt Limited as on 31st March 2011. Coming to assets, building at cost less depreciation was given, which was 4 lakhs. Plant at cost less depreciation was given, which was 2,68,000. Trademarks and goodwill, inventory, trade receivables, P&L account debit balance was again given. Okay. In all the internal reconstruction problems, most of the times they are mentioning clearly P&L account under asset side. Or if it is the schedule 3 balance sheet under reserves and surplus, at least they are mentioned P&L account balance under negative figure. Next, authorized and issued capital was given, 12,007% preference shares, rupees 50 each. Preference dividend is in arrears for 5 years. In bracket, they were clearly given. Okay, which is an unrecorded liability. 15,000 equity shares of rupees 50 rupees each was given. Face value, preference shares 50, equity also 50. Loan was given, trade payable, other liabilities. Guys, actually I forgot one more thing. Actually, I jumped to problem number 4. There actually another question is there now. We need to prepare the balance sheet now. Balance sheet. Yes. Just now I found it. I'm so sorry. Let me continue with problem number 3, balance sheet. Then I can switch over to problem number 4. Just hold for some time, please, all of you. Come to problem number 3, balance sheet, guys. Please check it. Or I'll explain balance sheet through my notes. That's better to save my time. Okay, concentrate here, all of you. Now, one by one. Sir, come to share capital, guys. All of you coming to share capital. Earlier, number of equity shares were 75,000. Now also 75,000. One by one, please check, all of you guys. Just a moment. Yeah. So come here, all of you, please observe the journal entries. First, while drafting the balance sheet, we will start with equity and liabilities, under that shareholders funds, under that A share capital. Now we are calculating the total worth of equity share capital. Please check the entries. In entry number 1, all of you start with your calculators. In entry number 1, equity share capital was 1,50,000. So 1,50,000 plus. Then entry number 2, no impact for equity share capital. For entry number 3, there is impact of equity share capital for 24,000. Add plus 24,000. 1,50,000 plus 24,000. Next, entry number 4, there is no involvement of equity share capital. Entry number 5, no equity share capital. Entry number 6, no equity share capital. 7, nothing. 8, nothing. In 9, 90,000 equity share capital is there. Add plus 90,000. Yes. Next, come to 10. There is no involvement of equity share capital. 11, no equity share capital. Till now, I got 2,64,000 in my calculator. Hope you are also having the same figure, 2,64,000. Now, can you please tell me Now we are in the process of internal reconstruction. We converted the 10 rupees face value into the 2 rupees face value. 2,64,000 divided by 2 rupees face value means how many number of shares? 1,32,000. So 1,32,000 equity shares at the rate of 2 rupees each. That is total 2,64,000. That is about equity share capital. Then regarding the preference share capital, in entry number 2, 3 lakhs is available. In entry number 2, which is 3 lakhs is available. Correct. Next, 3 lakhs plus 3 lakhs plus nothing, 4, 5, 6, 7, 8, 9, also nothing, 10, 11, 11th entry, nothing guys, only 3 lakhs is available. Now, can you please tell me all of you, this 3 lakhs face value was how much? 75 rupees. That means how many number of preference shares? 3 lakhs divided by 75, which were 4,000 preference shares. So 4,006% cumulative preference shares at the rate of 75 rupees each, which was 3 lakhs. So 2,64,000 plus 3 lakhs, total 5,64,000. Like that, you need to check. That's why drafting, at the time of drafting the balance sheet for an internal reconstruction problem, you should have a good idea for on the entire problem. So now you can put the share capital 5,64,000. Next, no need to think about the reserves and surplus. You know why? Sir, in the last entry, even single rupee we are not transferred to reconstruction to capital reserve. Because if reconstruction account balance is much more, then we would transfer to something to the capital reserve. Here, capital reserve not at all coming, not at all came. And one more thing, entire P&L account debit balance also we already knock off. That's why reserves and surplus was nil. Reserves and surplus was nil. In the balance sheet also, they clearly given that P&L account debit balance only. There is no other reserves and surplus. That's why reserves and surplus nil. Okay, fine. Next, after that, as per the problem, if you observe, the next liability would be debentures. Sir, regarding the debentures, what happened? Can you please tell me, all of you? If you check the debentures, point number 6, come here. The existing balance was 3,75,000, out of which we are settled through 1,20,000 through freehold property to the extent of 1,20,000. The remaining balance of debentures we need to show under the balance sheet. That's why 2,55,000 we should need to show under long-term borrowings. Can you please check, guys, all of you, long-term borrowings 3,85,000. The same. Oh, it's 3,85,000. How it comes? Any other debentures we issued? Please check. This is 2,55,000. But here I wrote which is 3,85,000. Can you please check, guys, all of you, any other debentures we issued anywhere? Yeah, here itself is there. 1,30,000. In point number 7, entry number 7, 1,30,000 is there. 2,55,000 plus 1,30,000. So total will be 3,85,000. So the same amount of 3,85,000 I shown under long-term borrowings. Is it okay, guys? Next, come to problem, guys, all of you. Sir, after debentures, accrued interest we paid. Then in current liabilities, what about bank OD? Anything they mentioned about the bank OD? They are not mentioned. So just put it as pending for the bank OD for the time being. Why? You know, if bank is having a positive balance, we may write under asset side. If bank we are having a negative balance, then we may record under the liability side. That's why please put the pending, all of you, for the bank for the time being. Next, come to the trade payable. Trade payable, entire 3 lakhs. Anything is mentioned here? Trade payables. I think so. Nothing was mentioned regarding the trade payables, right? So that's why trade payable, the entire amount we should show under current liabilities, and entire director's loan was paid off in the form of equity shares or in the form of cash or something which be waived off. So that's why for the time being, current liabilities are only 3 lakhs. Current liabilities are only 3 lakhs. Let me check. Under current liabilities, trade payable were 3 lakhs. Sir, what about then bank OD, sir? Bank OD, let us check the cash balance, all of you. Please come here. Can you please check, all of you, the cash balance? Start with me. All of you in the calculator, first start with existing balance. Existing balance bank OD, how much? 1,95,000. You can put in your calculator minus 1,95,000. Whenever bank or cash coming into the picture, you can consider, guys. Point number 1, no bank cash. 2, nothing. 3, nothing. 4, cash outlay is there, right? Minus 22,500. Next, 5th, nothing. 6th, nothing. 7th, inflow plus 1,30,000. 8th, Inflow plus 1,40,000. Ninth, outflow minus 5,000. Next, 10th, outflow minus 12,500. 11th, nothing. So I have the balance of 35,000. I have the cash balance of 35,000. Bank balance. Where I will represent, under current assets, I will represent. If you check the balance sheet in my notes, maybe I would represent the cash and cash equivalents at 35,000. That is the reason why I'm not representing the bank OD under current liabilities. Do you understand all of you this? So that's why we are having the positive cash balance. That's why I represented under current assets. So with that cash and cash equivalent figure also I covered. Then come to the problem, all of you. Under asset side, sir, freehold property. What happened to the freehold property? Yes, there is a detailed discussion we made regarding the freehold property. Sir, for the freehold property, 1,20,000 freehold property we already given to debenture holders. We have 3,25,000 virginal book value. We revalued 3,87,500. Such freehold property we should take into consideration right now. So which was 3,87,500 considered into the balance sheet. Next, plant. What happened, guys? For plant, anything they mentioned here, guys? Plant. Nowhere it is involved in the plant account. So that's why plant also you should need to consider in the balance sheet. Entire amount of 50,000 you should need to consider under PPE. Patent and goodwill we knock off. Patent and goodwill knock off. So total of PPE how much? We can check through my notes. Come down. In PPE, freehold property is there for 3,87,500. Plant is there for 50,000. So the total PPE will be 4,37,500. Put that. PPE 4,37,500. And intangible assets were nil. Patent and goodwill were nil. Intangible assets were nil. Then come to current assets, guys. Out of the current assets, trade receivables, we have certain bad debts. If you remember, in point number 7, 68,500 would be the bad debts. That's why you can reduce from the debtors 68,500. Okay, next. Inventory. Inventory also something we've written off. Inventory, how much we've written off? 65,000 you written off. You can put for the inventory minus 65,000. Then for trade receivables, 4,85,000 minus 68,500, which was 4,16,500. For inventory, 4,25,000 minus 65,000, which is for 3,60,000. Cash and cash equivalents was already over. That's it, guys. This is all about balance sheet. Sir, at the time of preparation of balance sheet, lot of pain is there, sir. Yes. For internal reconstruction problem, journal entries are easy. Preparation of balance sheet is, I'm not telling the difficult, but little bit you should need to provide in your mind inside the problem. Do you understand? Because each and every aspect is going to impact. Is it okay, guys? All of you, please let me know. Shriram, yes, if you want, you can open the cash and cash equivalent accounts, ma. Open the ledger, then the balance of cash you can put under the balance sheet, not an issue. Or without opening the ledger also, you can do it. Nobody will object you. Is it okay, guys? All of you. This is all about problem number 3. Okay. Guys, this time just I want to take the early break. I know the time is 7:53. Because I don't want to break the next problem in between. So that's why, because that problem also will take around 15 to 20 minutes time for me. So please all of you go for the break. So in freshly we can start. We can assemble exactly by 8:03. Please all of you go for the break, guys. Guys, I hope we completed problem number 3, right? Then just now decided that I want to skip problem number 4. I will do problem number 5 because which is a different problem. If you come across first time in the examination, then you may go into the different direction. That is the reason why on behalf of taking problem number 4, I want to consider problem number 5 for discussion. Please consider it, guys, all of you. Problem number 5. Repair Limited is in the hands of a receiver for debenture holders. Sir, who is the receiver for debenture holders, sir? Actually, liquidation of companies chapter was not yet over for you, but if liquidation of companies chapter over, then you may appreciate who is the receiver for debenture holders. Receiver for debenture holders is also as like liquidator only. Sometimes what will happen at the time of liquidation of the company? At the time of liquidation of the company, two different liquidators are appointed. One is official liquidator, that is the liquidator appointed by the court. And another one is receiver for debenture holders. Because in any organization, debenture holders may not participate in the affairs of the company, as well as they may not participate in the general meetings conducted for shareholders as well. That is the shareholders general meetings also, such debenture holders may not participate. That's why really what is happening inside the company, they are not knowing, even though they're also contributors for the growth of the company. So that's why at the time of liquidation of the company, to protect the interests of such debenture holders, they will appoint one receiver. That is on behalf of the entire debenture holders, they are selling the assets in the outside market. In the order they are making repayments, whenever debenture holders place or whenever debenture holders order coming into the takes place, then they will hand over the amount to the debenture holders, and the remaining amount just they hand over to the liquidator. Then the liquidator will close the remaining all issues. Then at that particular scenario, the receiver of debenture holders is known as another liquidator. Hope you understand the base concept. So something in the deeper manner we may discuss in liquidation of companies. Okay, so Repair Limited is in the hands of a receiver for debenture holders who holds a charge on all assets. Who holds a charge on all assets except uncalled capital. Charge means who is handovering all the assets except uncalled capital. Sir, is it uncalled capital is an asset? In general, it is not an asset. During the process of liquidation of the company, if liquidator is not having enough funds on their hands, then they can make a call to the extent of the uncalled capital. Tell me, guys, a number of times you may learn in the Companies Act 2013 as well. Uncalled capital in general is not an asset, but during the process of liquidation or at the time of liquidation, if the liquidator is not having the enough funds on their hand, then they can realize amount from partly paid up shareholders to the extent of the face value, which is nothing but uncalled capital. So this receiver is having charge on all assets except this uncalled capital. The following statement shows the position as regards creditors as on 30th June 2015. So the problem itself is completely in different language, sir. We can't understand. No worries, guys. If you understand the liquidation of companies, everything we will discuss, then you can easily understand these sentences. But one thing I am telling you indirectly, or they are conveying indirectly, the below given information was not a balance sheet. For that purpose only, this problem I am taking. Sir, liabilities, assets, something they are given, na? Then this is balance sheet only, na? Why you are not telling this is not a balance sheet? They are clearly mentioned that the following statement, which is a statement, shows the position as regards. As regards means after settling the creditors as on 30th June 2015. After settling the creditors, what is the position? Just they are telling that to the creditors may be secured creditors. After settling the secured creditors, what is the position? Just they are given. What is the position this side? Under liability side, they are given that 6,000 shares, 60 rupees each, 30 paid up value. In balance sheet, equity share capital will come 6,000 into 30. which is how much? Can you please tell me? 6,000 into 30 means how much? Which is 1,80,000. We need to draft the balance sheet here. From our end, we need to draft the balance sheet first. For the existing company, we need to draft the balance sheet. First debentures was given, which is a liability. Second debentures was given, which is another liability. Unsecured trade payable, which is another liability. Next, property, machinery, and plant. Cost was 3,90,000, which is estimated to realize at 1,50,000. Can you please tell me, all of you, in balance sheet, estimated realizable values we are considered, or the book value we are considered? The costless depreciation we are considered, right? That's why in the balance sheet, we need to consider 3,90,000. We should not consider 1,50,000. But what is this 1,50,000? The just liquidator is estimated to realize at 1,50,000. Cash in the hands of the receiver, which is 2,70,000. So the cash we are going to show under the balance sheet. Charged under debentures 4,20,000. Uncalled capital 1,80,000. What these two items, sir? Sir, charged under debentures 1,50,000 plus 2,70,000. Liquidator is assuming that total I have 4,20,000 to disburse among the debenture holders. The total 1,50,000 plus 2,70,000, just he is telling 4,20,000. So this is not form part of our balance sheet at all. Just he is conveying that this amount is available to repay the debenture holders. We are not at all considering in the balance sheet. Uncalled capital is not form part of the balance sheet. Tell me, guys, in generally, uncalled capital, are you showing as an asset in the balance sheet? No. During the process of liquidation, the liquidator will utilize the uncalled capital to discharge the other liability holders if the cash is insufficient. Fine. Then the total he made, which is 6 lakhs, the total is also irrelevant. Deficiency is also irrelevant for the balance sheet. Deficiency means he is talking from liquidation point of view. Sir, then how I can draft the balance sheet, sir? First, let me put the balance sheet in my OneNote. Then everything will be understand from your side. Problem is problem number 5. Please, all of you allow me to put the balance sheet in my OneNote. 5. Balance sheet of which company, guys? It is balance sheet of Repair Limited. Repair Limited as at 30th June 2015. Now, balance sheet liabilities amount rupees. Just make it present in T shape because in the same model they are given, right? Assets amount rupees. Fine. Now, equity share capital. How much, guys? Equity share capital. All of you, please participate. To the extent of paid up value, 6,000 into 30, which was 1,80,000. After equity share capital, just a second. Yeah. First debentures are there, which is also a liability. First debentures, how much? 3 lakh. Second debentures, how much? Which were at 6 lakh. And then unsecured trade payable, which is simply trade payable 4,50,000. These are all known liabilities. And coming to assets, PPE, it should be shown at cost price, which was 3,90,000. And cash and cash equivalents. Cash and cash equivalents given at 2,70,000. Remaining entire balance was irrelevant. Charged under debentures, uncalled capital, deficiency, all that is irrelevant for me. Now you can close the balance sheet. All of you may know the total of the liability side. 1,80,000 plus 3 lakhs plus 6 lakhs plus 4,50,000, which was 15,30,000. So this side also 15,30,000, but total of the assets not come to 15,30,000. What is the remaining balance? You know, P&L account debit balance. So the loss occurred till the date in the Repair Limited, we need to derive it as a balancing figure. How much? Which is 3,90,000 plus 2,70,000 minus 15,30,000, which was 8,70,000. which is 8,70,000. For this purpose only this problem was considered. Except this, there are no special points at all. Sir, someone, Karthik Gupta is asking that, sir, is this balance sheet is form part of the answer? Absolutely, Amma. Without preparation of balance sheet, how you can derive the P&L account debit balance? Deficiency is not the P&L account debit balance. At least to find out the P&L account debit balance itself, you need to prepare the balance sheet, right? Okay. Sir, in exam, we can prepare in T-shape. My dear, in examination purpose, how you can use in generally, in the problem, if they given the T-shape balance sheet, in the answer, you can put the T-shape balance sheet. That is also, that too, this is not a main notes, this is a working notes. For which purpose? For the purpose of finding the P&L account debit balance. That's why you can use the T-shape balance sheet, because in the problem itself, they are mentioned in the T-shape balance sheet, right? That's why in the working notes, you can mention. Is it okay? That too, this is working notes, not the main notes, which is working notes for the purpose of calculation of P&L account debit balance. Okay. But at the first instance, I am not revealing that point. At the time of preparation of balance sheet also, you may aware in the examination that point. Is it okay? Can I continue further? Fine. Now, further certain twists are there. While reading the problem, please observe carefully. Mr. A holds the first debentures for 3 lakhs and the second debentures for 3 lakhs. He means A, is also an unsecured creditor for 90,000. Sir, there is one party called A, Mr. A. Let us assume Mr. A totally acting as 3 different personalities. Okay, as like you may see the movie Aparachitudu. There in Vikram is playing total 3 roles, right? One is like Remo, another one is like Master, that is Pantulu, and another one is some other Aparachitudu. As like here, A is acting as a first debentures for to the extent of 3 lakhs, and for second debentures also he's acting to the extent of 3 lakhs, and for unsecured creditor 90,000. Unsecured creditor 90,000. A is having total 3 shades. Okay. B holds second debentures for 3 lakhs and has unsecured trade payable for 60,000. This is only double force. Like in typical, I actually belongs to Telangana. That's why generally we are seeing the Tollywood movies. I know if you are North Indians, you may see certain double action movies as well. But most of the times in Tollywood, we may see Balakrishna, the double action. Okay. So like that, you can imagine. Here, B is holding two liabilities. One is second debentures. How much? 3 lakhs. Trade payable 60,000. You can share with me, guys, in the query box. May I know which heroes are generally acting for double action? Generally, they are playing the double action for in the North India most of the times. May I know? Nobody is replying, yeah. At least for other than the subject also, at least you can provide the reply, na? Okay. Here most of the persons are there from Telugu states as well, I know. Apart from that, at least certain North Indians are from the other states like Kerala or Tamil Nadu. Someone you can tell me some heroes' names. At least I hope full participation is there now at least. Okay, I think so. There is delay. Sonu Sood. Okay, fine. Fine. Okay, let me continue the flow. There are 2 different parties are available. One is A, another one is B. A is holding first debentures for 3 lakhs, second debentures for 3 lakhs, and unsecured creditors for 90,000. And B is holding to the extent of for secured debentures 3 lakhs and for trade payable 60,000. That is the information he provided. Sir, after reading such information, what I should need to do, sir? First, immediately you should need to one thing. First debentures, second debentures, unsecured trade payable, transfer to A. Secured debentures, trade payable, 3,60,000 transfer to B. That means what are the entries? The entry were here. first debenture, existing liability cancel to the extent of 3 lakhs. Second debentures cancel for 3 lakhs. Unsecured trade payable 90,000. Make it transfer to A, because right now you know that amount should payable to whom? A account. Total how much? 6,90,000. In the similar mode, second debentures for 3 lakhs and trade payable 60,000 you can transfer to B, that is 3 lakh 60,000. That simple accounting treatment, how much amounts we need to payable to that particular individual party, just we transferred. That is the information he provided. Now the following scheme of reconstruction is proposed. What is the reconstruction proposal? Mr. A is to cancel 2,10,000 of the total debt owing to him. Total debt owing to him to A, how much? 6,90,000. Out of such 6,90,000, he is ready to forego. Cancel means ready to forego. Okay, comma. Sir, up to this sentence is over. This is another sentence started. To bring 30,000 in cash. To bring 30,000 in cash means Mr. A want to introduce 30,000 cash and to take first debentures in cancellation of those already issued to him for 5,10,000 in satisfaction of all his claims, sir. Sir, this point look like completely like a Spanish language, sir. We can't understand anything. Okay, how it will be now? That movie was actually in another language other than our mother tongue, but certain subtitles are there. We can't understand properly sometimes the scenes. It may look like A is to cancel 2,10,000 of the total debt owing to him. That's okay, fine. To bring 30,000 in cash. First, let me start with this sentence for better understanding. Please ignore this one as well. To bring 30,000 in cash. Sir, if Mr. A introduced 30,000 cash, let us assume if A introduced 30,000 cash, what happened? Bank account debtor 30,000 he introduced, then that amount also we should need to pay at later point of time. To whom? A na? Because if A introduced 30,000 cash means we need to repay in the future. Am I right? Now, can you please tell me, after introduction of this 30,000 cash by Mr. A into the company, what is the total amount we should need to make repayment to A in the future? 6,90,000 plus 30,000, which was 7,20,000. That is the story first you should need to understand. Out of this 7,20,000, A is to cancel 2,10,000. A is to cancel 2,10,000. Cancel means straight away. It should need to make a transfer to a reconstruction account. May I know what is the balance amount? 7,20,000 minus 2,10,000, which will be 5,10,000. Now, what about this 5,10,000, sir? If you read the further information, you know. And to take the first debentures in cancellation of those already issued to him. Now, after cancellation of this, for this 5,10,000, we are issuing new first debentures. These are altogether new first debentures for 5,10,000 in satisfaction of all his claims. Now, what I understood, initially to A, I need to pay 6,90,000. Now, A introduced cash to the extent of 30,000. Total amount payable to A was 7,20,000 after introduction of 30,000 cash, out of which 2,10,000 straight away sacrificed by Mr. A. For the remaining balance of amount of 5,10,000 as a full and final settlement, we are issuing new first debentures. Now, what is the journal entry, guys? Mr. A account debtor. Total cancel 7,20,000. Out of which transfer 2,10,000 to reconstruction account. So for the remaining 5,10,000, you can issue the first debentures. That is 5,10,000. Now you can tell me, guys, treatment is simple or not, but understanding the problem, understanding the point itself is difficult. That is where the success actually hidden in case of internal reconstruction problems. If you understand the given sentence in the proper manner, then you can provide the accounting treatment pretty much easily. Otherwise, you may provide the accounting treatment in different mode. Okay. Fine, guys. Now let me continue with point number 2. B is to accept 90,000 in cash in satisfaction of all claims by him. He is not introducing. Just we are telling that we are paying as a full and final settlement 90,000. Now, can you please check all of you regarding the B? Total amount payable to B was 3,60,000. But just now we are telling that we are paying as a full and final settlement for 90,000. That means amount sacrificed how much, may I know? Sacrifice made by B, 3,60,000 minus 90,000. Sacrifice was 2,70,000. What is the entry? B account debtor 3,60,000 to the extent of sacrifice transferred to reconstruction account 2,70,000, and we are paying cash, that is 2 bank or 2 cash as your wish, 90,000. Such a simple entry for point number 2. Do you agree, guys, all of you? Come to point number 3. In full settlement of 75% of the claim. 75% of which claim? Unsecured creditors other than A and B. Now, if you observe, he is talking about the unsecured trade payable. Something, can you please tell me what is the total amount of unsecured trade payable? Unsecured trade payable total amount was given at 4,50,000. Now, let me read the sentence by sentence. Let me split the sentence, which is the total unsecured trade payable 4,50,000, out of which he is talking other than A and B. Sir, A and B put together, unsecured trade payable how much? A and B put together. Sir, A holds for unsecured trade payable 90,000 and B holds 60,000. A and B put together 1,50,000. Just ignore. Regarding this, already accounting treatment was over because those were transferred to A and something we paid to A and something we paid to B as well. Now, for the remaining, other than A and B means the remaining. This is other than A and B. 4,50,000 minus 1,50,000 means 3 lakhs. Now he is talking about other than A and B. Trade payables holded by other than A and B. Now, in full settlement of unsecured creditors other than A and B, 75% of the claim. Okay. Now, out of this 3 lakhs, he is talking about 75% of the claim. 3 lakhs multiplied with 75% of the claim, how much? Which was 2,25,000. Okay. Agreed to accept 4 shares of 7.5 rupees each, fully paid against their claim for each share of rupees 60. Oh my God. From here to here, I need to read one more time. I think so till now up to this. Hope you understood. Sir, unsecured creditors other than A and B, 3 lakhs, for out of which 75% of the claim, which is 2,25,000, we are settling right now. Agreed to accept 4 shares of 7.50 each, fully paid against their claim for each share of 60 rupees. Sir, for each share of 60 rupees, they are agreed to accept 4 shares of 7.5 each. 4 multiplied with 7.50. How much? Which is 30 rupees. Please, all of you consider here. Indirectly, they are conveying that if for every 60 rupees share, they are ready to settle 30 rupees. That means half of the amount they want to settle. Remaining of what happens, sir? If nothing was mentioned, they're ready to forgo. One more time reading. Agreed to accept 4 shares of 7.50 each, fully paid against their claim for each share of 60. For 60 rupees share, they are ready to accept 4 shares at the rate of 7.50 means 30 rupees they are ready to accept. What about remaining 30 rupees? What about remaining 50%? They are ready to forgo. That means out of this 2,25,000, 50% is They are agreeing for equity shares. For the remaining 50% is reconstruction account. That too, equity shares, how many number of equity shares I need to issue, sir? Each and every equity share they are issuing at 7.50 per each. 2,25,000 into 50% means 1,12,500. 1,12,500 divided by 7.5. Divided by 7.5, which is equal to 15,000 shares. That is 15,000 equity shares at the rate of 7.5 each. They are going to issue. The remaining amount of 1,12,500 will goes to reconstruction. Just wait, please hold for some time. I will put the journal entry. No worries. Sir, 75% claim is over, sir. What about the 25% claim? The balance of 25%. Now he is talking about the balance of 25%. Now he is talking about the balance of 25%. Is to be postponed and to be payable at the end of the 3 years from the date of the court's approval of the scheme. Now you can treat the balance of 25% means 75,000. You can treat it as a long-term liability, which is trade payable, right? Which is a current liability, but they are telling that which we are going to pay after 3 years. 3 years means it's not a current liability, it's a non-current liability. Fine. Now, one more time explaining the entire scenario, please concentrate. The total trade payable were 4,50,000, but he's not talking about the total trade payable. Trade payable holded by other than A and B. Holded by other than A and B was 3 lakhs because A and B holded 1,50,000. The remaining was 3 lakhs. Out of 75% of the claim, they are discharging 50% only. The remaining 50% was sacrifice made by the trade payables. That's why 50% means 1,12,500 and the remaining 50% is 1,12,500. How they are telling the 50% also? How you know that? For every 60 rupees share, they are ready to accept 4 shares of 7.50 each. That means for every 60 rupees, they are ready to take 30 rupees. That is the reason why we concluded that 50% they are expecting equity shares and the remaining 50% was sacrifice. And for the balance of 25%, just we are continued as a liability in the balance sheet at the time of preparation of balance sheet after internal reconstruction as a long-term liability. Now, what is the journal entry, sir? Concentrate. Trade payable account debtor. Trade payable account debtor. Only we need to talk about 75% claim. That is 2,25,000. Cancel the entire amount of 2,25,000. Out of which straight away to the reconstruction. To reconstruction account 1,12,500. For the remaining, we are issuing 15,000 equity shares at the rate of 7.5 each. To equity share capital 1,12,500. Narration. Being settlement made to trade payables holded other than A and B to the extent of 75%, out of which 50% in the form of equity shares and the remaining 50% will be sacrifice made by the such trade payable holders. That's it. What was given in the same manner you can put in the narration as well. Hope you understand everyone, guys. Is it okay? Can I proceed? Fine. With this, point number 3 is over. Come to point number 4. Uncalled capital is to be called up in full. And first, uncalled capital is to be called up means what I should need to do. Uncalled capital was 1,80,000. How you know? 6,000, 30 rupees was paid up means remaining 30 rupees we need to make a call. So what is the entry for share call? Equity share, final call account at R. Sorry, bank account at R2. Equity share, final call account. Tell me, guys. The entry was, just a second. At the time of making equity share final call, bank account at R to equity share final call account. Amount 1,80,000. Sir, once this call made, all the equity shares are fully paid up. All the equity shares are fully paid up. Before that, actually, which entry we need to pass? The entry was equity share call to equity share capital. Equity share call to equity share capital. If you want, you can write that one as well. Equity share final call account debtor, equity share capital account. That is also 1,80,000. By passing these two entries, what will happen? The equity shares are fully paid up right now. 6,000 into 60 rupees, 3,60,000 is the equity share worth. Do you agree, all of you? Now, I only read the part of the sentence. Uncalled capital is to be called up in full, and 52.50 per share was cancelled. Now, the total paid up was 60 rupees now, out of which 52.50 per share was cancelled, means sacrificed, thus making the shares of rupees 7.50 each. Now, what is the journal entry, sir? Consider, guys, all of you. Equity share capital account debtor. Face value how much? 60. What is the total amount? 3,60,000. Just now all the equity shares are fully paid up now. To equity share capital account, 7.50 each. Remaining amount to reconstruction account. Number of equity shares were 6,000. So 6,000 into 52.5 goes to reconstruction. 6,000 into 1.5 goes to equity share capital. Here 45,000. Here 3,15,000. That's it, guys. This is the entry for last point number 4. Assuming that the scheme is duly approved by all the parties interested and by the court as well, give necessary journal entries. Even though for look like problem is very small, only 4 points were given, but a lot of adjustments are there. A lot of understanding ability should be required to resolve the problem. So let me visualize the twist one by one. The first and foremost twist was, still the problem is not yet over, just hold till not yet over, just hold. The first and foremost issue was finding the P&L account debit balance. Okay, sir. We prepared the balance sheet. We realized that which is the given information is not a balance sheet. We prepared the balance sheet from where we realized the P&L. After that, regarding point number A, to bring 30,000 in cash before making settlement to A, first he introduced 30,000 cash. After the settlement was really occurred, that point also you realize, that is twist number 2. Next, come to point number 3. In that, trade payables other than A and B, he is talking out of its 75%. In that 75% claim, we are only settling 50%, remaining 50% they are foregoing. That also you should need to realize through point that agreed to accept 4 shares of 7.50 each fully paid up against the claim for each share of 60. For each share of 60, they are ready to take 4 shares of 7.5. For every 60 rupees, they are ready to agree 30 rupees. That fact also you should need to realize. And finally, we should need to cancel after the partly paid up shares into fully paid up shares. We need to cancel the remaining portion. Only you should need to make it transfer to equity share capital. To the extent of amount cancellation, you should need to make to transfer to reconstruction. Fine. Sir, after happening of all such things, what I should need to do, sir? Find the balance under reconstruction account. The balance under reconstruction account, you should need to knock off with P&L account debit balance. Can you please check, guys? All of you from entry to entry, start with your calculator. All of you start with your calculator. Started here. Then in first entry, second entry. In this entries, there is no involvement of reconstruction account. Come down. Here also there is no involvement of reconstruction account. Come down. Yeah. Here the balance transferred to reconstruction was 2,10,000. Start in your calculator 2,10,000. And here while settling to the B, we transferring amount to reconstruction was 2,70,000 plus 2,70,000. So till now we have 4,80,000 balance under reconstruction account. Come down. While settling the unsecured trade payables, here reconstruction account we are having 1,12,500. That is 1,12,500. Add 1,12,500. Fine. Next, for the remaining 25%, there is no reconstruction account was involved. Come down. At the time of making settlement to equity shareholders, that is, equity shareholders are also ready to sacrifice for 3,15,000. That's why you can add plus 3,15,000. Total I have 9,07,500. Hope in your calculator the reconstruction balance was 9,07,500. Out of this 9,07,500, I need to settle the P&L account debit balance. P&L account debit balance, how much we got here? 8,70,000. Yes, we can able to settle the P&L account debit balance with the available balance under reconstruction account. Then you can pass the entry. What is the entry? Reconstruction account data 9,07,500 to P&L account 8,70,000 to capital reserve. To capital reserve, which was 37,500. Because the excess of balance over reconstruction account over the P&L account, we can make it transfer to capital reserve. Just a second, let me cross check the answer with my printed notes as well. Just a second, please. So problem number 5, P&L balance, I also have 8,70,000, and finally capital reserve was 37,500. That's absolutely fine. Okay, hope you understand this problem. Let me check with the queries. If anyone is having any query, please let me check. Hiral is asking one question, sir. If in question preliminary expense is given, then without mention adjustment in question, the full amount should be write off as like P&L debit balance. Is it correct, sir? Sir, I clearly mentioned that except the P&L account, if anything was given, if it is specifically mentioned, then only we need to cancel. I told you, na, whether mentioned or not, the P&L account debit balance we should need to cancel. Regarding any other, which is fixed asset, preliminary expenses means fixed asset. If something is given to cancel, then only we should need to cancel. And one more thing here, these all problems are a little bit older problems, right? These are study material problems, and the same legacy is also continued by me as well. The recent problems, in generally preliminary expenses are, they are not at all given in the balance sheet as well, because as per accounting standard 26, the entire preliminary expenses which were incurred in a particular year, we should need to write off in that year itself. We are unable to amortize over the n number of years. Okay, that's why such concept doesn't in the picture right now. Hope you understand. Is there any other query apart from this, guys? Yeah, hope you enjoyed this problem, guys. Fine. Let me proceed with another problem. And before proceeding with that another problem, I think so this is better time to introduce the concept of surrender of shares. First, let me introduce the surrender of shares concept. Then we will resolve one problem on surrender of shares concept. Then if time permits, I'll take up another problem. Okay. Come to my notes, all of you. Guys, come to all of you my notes. Not one notes, to my notes. My printed notes. Yeah, this is my printed notes. Just a moment, please. Yes, guys. Sir, I think so. Previously, you may listen the word forfeiture of the shares. Surrender of shares is altogether new concept. Just leave the surrender of shares concept. Anyway, we are discussing right now. You may aware the concept of forfeiture of the shares. Can you please tell me, guys? Anybody know about the forfeiture of shares? Or when the forfeiture of shares concept is applicable? Just put your answers in the query box. When company make a call on any partly paid up shareholders, if such shareholders are unable to make a call money, unable to repay that call money to the company, then company have a right. Company have a right to forfeit. Forfeit means cancel such equity shares. And whatever the amount paid till the date, without paying that amount to the shareholder, they may cancel. That right is nothing but forfeiture. They can they have a right to forfeit such shares. That means forfeiture of shares right is given by whom? Given by Companies Act 2013. And there are also certain provisions were clearly drafted in the Companies Act 2013, which procedure you need to follow, and what is the accounting treatment. And at the time of forfeiture of the shares, or sorry, after forfeiture of the shares, whether we can able to reissue such shares or not. At the time of reissue of the shares, what will be the maximum discount we can given? That is, how much discount we can able to given, guys? Through the forfeiture of the shares, what will be the maximum profit we got? To that extent of profit, we can provide it as a discount at the time of reissue of shares. All such issues were clearly intimated in the Companies Act 2013. I don't want to go into the roots of the forfeiture of the shares concept. Just I'm telling you. Sir, that means forfeiture of the shares means one thing, cancellation of existing shares only. That means cancellation of existing share capital only. Do you agree, all of you? Now, coming to surrender of shares. It's not like a forfeiture of shares. We are not cancelling any existing equity shares. It's not like a forfeiture of the shares. And one more thing, there is no provision was mentioned in Companies Act 2013. There is no provision regarding the surrender of shares. Sir, by seeing the word surrender, we can appreciate that the existing equity shareholder voluntarily surrendering their shares to the company. Am I right or wrong? But no provision was mentioned in Companies Act 2013 means no company have a right to ask surrender the shares by the shareholders. If the shareholders voluntarily surrender their shares to the company, and company can accept. That too, court approval should be mandatory. Court approval. Or as per the order of the court, we can do the surrender. Even though there is no provision in the Companies Act 2013, as per the order of the court, we can go for the surrender of the shares. That too, which is a voluntary surrender. Company do not have any right to ask such shares from the shareholders. If the shareholders may surrender such shares to the company, then the company may accept. That point, first of all, you should need to understand. Okay. Sir, rather than surrendering of the shares, it is better to sacrifice, na? Surrender of shares means also sacrifice of the shares only, na? Certain portion they may sacrifice, na? Or the entire portion. For example, if they are holding 10,000 equity shareholders, maybe they are ready to surrender half of the shares. That is 5,000 shares. That is also sacrifice, na? That is also sacrifice. But why we are not cancelling such shares right now? The shares which are ultimately surrendered by the shareholders, we may utilize at later point of time for the purpose of issue to the various parties like debenture holders, trade payable holders, or that means creditors, or to any other preference shareholders or etc., any other party or banker. Because cancelling the share and for the reissuing the share, again, company may incur certain expenses. Do you know? For example, if you want to cancel straight away, you can cancel. That amount is ultimately transferred to reconstruction account only. But at the time of issue of new shares, if the company is a listing company, it should need to pay the listing fees for the new shares. And the demat form and everything we need to transfer. Such all expenses they might incur, which is a time consuming process as well at the time of making issue to the various parties such new shares. Then why you are cancelling the existing shares and why you are incurring certain expenses at the time of issuing the new shares? Rather than cancelling, first you can take such shares from the shareholders who are voluntarily present such shares to the company in the form of surrender of shares. At later point of time, you can utilize such surrender of shares while making payment to the various parties like debenture holders or the trade payables or the creditors or the bankers or preference shareholders, etc. That is the concept behind the surrender of shares concept, surrender of shares. Is it okay, guys? All of you. Now, coming to the accounting perspective. Coming to the accounting perspective. Just before going to accounting perspective, let me check some queries. Mr. Karthik, sir, in case of surrender, the shareholder is expecting something in return. Will it be still considered as surrender and transferred to reconstruction because of sacrifice? Surrender at the time of making surrender of shares, shareholders will not expect anything. You know why? I told you surrender of shares not happened due to provision made in the Companies Act 2013. Surrender of shares happened due to the voluntary action made by the shareholder. Shareholder itself voluntarily giving. If they are giving voluntarily, why they are accepting something? Do you understand? That's why at the time of surrender of shares by the shareholders with the company, shareholders will not expect anything. Is it okay? Okay. So that's why such concept doesn't occur in practically. Hope you understand, Karthik. But that was a good doubt actually. Fine. Come down. Accounting perspective. Now let us have a good discussion. Let me take one example. What is that? Existing equity share capital. Total 1 lakh equity shares are there. Okay, let us assume 1 lakh equity shares are there. Each equity share face value 10 rupees and the paid up value also 10 rupees. So total paid up value was 10 lakhs. Now, out of this, to the extent of 50,000 equity shares were voluntarily surrendered to the company. So 50,000 equity shares voluntarily surrendered to the company. Sir, now what is the journal entry, sir? At the time of surrender of shares by the shareholders to the company, first of all, you should need to cancel the equity share capital to that extent. What is the entry? Equity share capital account data. At the time of cancellation, it should need to be debited now, always. So equity share capital account data. 50,000 multiplied with 10, which is 5 lakhs. You should need to cancel. We are cancelling the equity share capital for accounting perspective, but really in the outside, we are not at all cancelling such share. Tell me, guys, all of you. For accounting perspective, we are reducing the equity share capital. That means, is it in the outside market, we are cancelling such share certificate itself? No. We are not cancelling such shares. Still, such shares are there with the company hands. That's why temporarily we will put all such shares under share surrender account to share surrender account, which was 5 lakhs. If you observe one thing here, even though equity shareholders are surrender at this point of time, we are not recognizing any single rupee as profit. Even we are not transferring any single rupee to the reconstruction account. When we will recognize it as a profit at the time of utilization of share surrender through issue of equity shares to the various parties like debentures or the creditors or etc. Don't confuse. First, let me allow to discuss further. Then the overall theme I will tell you without having any confusion. Okay. Once the equity shareholders is ready to surrender their shares to the company, then the journal entry was equity share capital account are to share surrender account. Fine. Next. Now, let us assume creditors are there in my books 2 lakhs. Now the issue is for the entire creditors, we are settling through equity shares. We are not issuing the new equity shares. We are issuing the equity shares through utilization of share surrender. Through utilization of share surrender. Now consider all of you. This creditors settling as a full and final settlement through utilization of share surrender. Then what is the accounting treatment? First, whenever you are utilizing the share surrender, the entry should be reversed. That's it. Entry should be reversed means you are utilizing the share surrender, right? Now the entry was share surrender account debtor. How much amount you are utilizing, sir? 2 lakhs. To equity share capital account. To equity share capital account 2 lakhs. Now concentrate. Till now, I told you we are not recognizing any single rupee as a profit due to share surrender made by the equity shareholder at the time of the real surrender. But at the time of utilization of share surrender, we are recognizing the profit. I told you now. Now I am recognizing the profit. That is, the entry was creditors account debtor. We are settling the creditors. That's why creditors account debtor 2 lakhs. Creditors is having internally credit balance. That's why we need to make it debit to reconstruction account 2 lakhs. Sir, off understand, sir. Off we are unable to understand. There is some confusion is there, sir. Some ambiguity is there, sir. What really happening? Can you please tell me, sir, here? Just leave all such a share surrender and all other stuff. Only think one thing. Sir, for creditors, you are paying equity shares. Due to making payment to the creditors, right now, really do you getting any profit? No. For creditors, we need to settle 2 lakhs. We settled through equity shares. Really, due to making payment to the creditors, even though single rupee we are not getting the profits, but still you are transferring certain amount as a profit. Why? That profit is not due to settlement to the creditors. That profit was profit due to share surrender made by the equity shareholder. The only one thing you should need to understand here was the profit recognition was delayed. The profit recognition was delayed. We are recognizing the profit not at the time of real share surrender made by the shareholder. We are recognizing the profit at the time of utilization of such share surrender. If you understand that point, almost all the queries in your mind got vanished. Next, another thing for your better understanding. Sir, here share surrender is there. Here reconstruction is there. Cancel with each other. Now we are paying amount to the creditors to equity share capital. Because share surrender and reconstruction, just you can imagine for the time being, both are same. Because share surrender debit means ultimately the balance under share surrender. After utilization of share surrender, any balance under share surrender, ultimately we are transferred to reconstruction only. Which point I'm telling? For example, here in share surrender, 5 lakhs is there now. We utilize 2 lakhs now. Still 3 lakhs is there now share surrender. Ultimately, we are transferring to reconstruction only. The reason is, if something we are unable to utilize under the share surrender, which is profit to you, at least you should need to recognize now itself. That's why the balance under share surrender ultimately transferred to reconstruction. Just you can assume this share surrender is also reconstruction. Reconstruction credit, reconstruction debit with each other. Then creditors to equity share capital only the entry. The same thing I told you earlier. Okay. Please concentrate, all of you here. Sir, leave such all things, sir. The concept is okay, but for the examination in straightforward as a bullet, how our thought process will look like, sir. What will be our thought process, sir? Please consider all of you. What will be your thought process? At the time of share surrender, you should cancel the equity share capital, put the amount under share surrender. There is no confusion for that. That's okay, sir. Absolutely fine. Now the issue is only at the time of utilization of share surrender. Now the issue is only at the time of utilization of share surrender. Concentrate. At the time of utilization of share surrender, to whom you are issuing such shares, you should need to check. For that party, you can recognize the profit. Because for the utilization of share surrender, the entry is always share surrender to equity share capital. It doesn't change. One more time, I'm repeating. At the time of utilization of share surrender, the entry doesn't change. That is share surrender to equity share capital. That's why you should always think that we should need to recognize the profit at the time of making settlement to the party. That point you can remember in your mind. But is it really that profit was occurred due to making settlement to that party? No, that's not correct. That profit was actually we realized due to utilization of share surrender, because at the time of creation of share surrender we are not recognizing any single rupee as profit. That's why we are recognizing right now. Let me continue with one more example, then some more implications are involved, then you may have much more clarity on the concept as well. Let me take the creditors as 2 lakhs. Consider all of you. Now what happened now? Out of this creditors, 1,50,000 we are settling to share surrender. Remaining 50,000 really foregone by them. Foregone or sacrifice. Now, can you please tell me, all of you, for creditors, for this 50,000 real sacrifice means straight away it will go to reconstruction account. No doubt about it. This concept is clear. You know previously, which is having no link with the share surrender concept. When something is foregone by the party, we should need to transfer to reconstruction. Hope you are having the clarity about that. Now come here. 1,50,000 we are using the share surrender, right? First, utilization of share surrender entry. Share surrender account at R2. Equity share capital. For utilization, 1,50,000. That's it. Now, whenever settling to the party, you should need to recognize the profit. But such profit is not due to settlement to the party. That profit is occurred due to the share surrender account. Am I right? Fine. Now the entry creditors account debtor to reconstruction account. 1,50,000. Now for this also you should need to write creditors account debtor to reconstruction account. 50,000, 50,000. Sir, no need to write the similar entry for twice at different amounts. You can club both. Creditors total 1,50,000 plus 50, 2 lakhs. 2. Reconstruction account. 1,50,000 plus 50, 2 lakhs. Then no need to write this. Now, how this 2 lakhs will come? 1,50,000 due to share surrender plus 50,000 due to real sacrifice. This is the accounting treatment you need to follow. One more implication I will put. Concentrate, all of you. Creditors, again, you can consider it as a 2 lakhs. All of you, please observe, guys. Now, creditors, we are settling 1,50,000 through share surrender. We are issuing equity shares to share surrender. For the remaining 50,000, they are ready to sacrifice. As like similar above, na sir, what is the special here? Provided 20,000 worth of equity shares if we need to issue out of share surrender. Provided 20,000 worth of equity shares they are expecting out of share surrender. Now, the first and foremost issue, whenever they are giving like this, we should need to think gross sacrifice 50K, fine. In addition, they're expecting 20,000. So reduce the 20,000 in the form of equity shares. So net sacrifice 30,000. So this net sacrifice only we should need to transfer to reconstruction. This rule we know, we seen. Now, the remaining 20,000 rupees we are issuing through share surrender. The remaining 20,000 rupees we are issuing through share surrender. That means right now, first of all, for utilization of share surrender, how much amount? 1,50,000 here we are utilizing the share surrender, and 20,000 also we are utilizing the share surrender. For that, you can put the entry share surrender account debtor for utilization to equity share capital 1,50,000 plus 20, which was 1,70,000. That's fine, sir. Now, creditors cancellation entry. Creditors account debtor 2 lakhs. Total amount is close to reconstruction account. How, sir? Please consider all of you. For utilization of share surrender, 1,50,000 plus 20, 70,000. sorry, 1,70,000. For 1,50,000, we are utilizing the share surrender. That is the profit due to creation of share surrender. And another 20 here, 1,50,000 plus 20, 1,70,000 plus real sacrifice made by them, net sacrifice, 30,000. This is the 2 lakhs. What my conclusion, from case number 1. Where is the case number 1? Yeah, here. Case number 1. Case number 2. Case number 3. What is my conclusion, If you are settling the entire creditors, if you are settling the entire creditors through share surrender, entire 2 lakhs was transferred to reconstruction. Part of the amount settled through share surrender, remaining amount was sacrificed, entire 2 lakhs transferred to reconstruction. Part of the amount settled through share surrender, and they sacrificed something, and the remaining they are expecting out of the share surrender. Again, you are transferred 2 lakhs to the reconstruction. But here the entire 2 lakhs in the first case, you transferred to the reconstruction due to creation of share surrender for the 2 lakhs. In the second case, you are transferred 2 lakhs to the reconstruction, 1,50,000 due to creation of share surrender, and the remaining 50,000 due to real sacrifice. In case number 3, due to creation of share surrender for 1,70,000, that is for utilization of share surrender, and the remaining 30,000 will be the net sacrifice. That is the difference. Is it clear, guys? All of you? Sir, if you understand this concept, nothing is difficult here, sir. Then everything will be fine. If you are okay, then I'll proceed with one problem. Please, all of you, let me know. Put your thumbnails, thumbs up marks. Then I'll proceed with the problem. Hey, nothing came here. Are you with me? Oh, clear, sir. Fine. Very few members are participating. Please participate, all of you. Let me take up share surrender concept problem for discussion. Yeah, which is problem number 8. Please, all of you come to problem number 8, guys. Hiral is telling one thing. Sir, only one thing is important here. While utilizing the share surrender account, the profit is recognized. That's the beauty of concept. Yes, absolutely, you are right. Sir, what if we pay more than the value to creditors? Sir, if we pay more than the book value, which is lost to us, then debit the reconstruction. For example, creditors was 1 lakh. We are paying 1,20,000. Then debit the reconstruction, right? To that extent of excess, how much you are paying, can debit the reconstruction. Okay, that's simple. Okay, fine. Come to problem number 8. The summarized balance sheet of Revise Limited as at 31st March 2011 was as follows. Then under fixed assets, machineries were given. Current assets, inventory, trade receivables, bank, and P&L account debit balance, which is a loss situation, given for 6 lakhs. Authorized and subscribed capital, 10,000 equity shares of rupees 100 each were given for 10 lakhs. Unsecured loans, 12% debentures were given. Accrued interest is there. And under current liabilities, trade payables was given. Provision for income tax also given. Okay, further information. It was decided to reconstruct the company for which necessary resolution was passed and sanctions were obtained from appropriate authorities. While reading the sentence, you can appreciate each and everything. That is the reason why I told you the entire scenario. They provided certain resolutions by passing the general, by conducting the general meetings. They also took sanctions, approval from the court to conduct the internal reconstruction procedure. Accordingly, it was decided that now they are providing the scheme. What happened? Each share is subdivided into 10 fully paid up equity shares of rupees 10 each. Subdivision, first time occurred in the problems. So subdivision means, there is no change in the total paid up capital. Old face value, you may cancel. New face value, you may credit. If you observe, the old face value was 100. After subdivision, each share is subdivided into 10 shares means total 10,000 into 10 means 1 lakh equity share. 1 lakh into 10, total amount will be 10 lakhs only. Entry equity share capital accounted are in bracket face value 100, amount 10 lakhs. To equity share capital in bracket 10 rupees, the total amount is 10 lakhs. If you want, let me put that entry itself here. Problem number 8, right? First, let me start with that entry. So related to share surrender concept. Guys, I think so. The technical problem was not yet resolved. While I'm uploading the session notes, I think so, which is not visible to you. I think so. If you have any internal groups, please mention that problem to the ICA technical team, guys. Okay. Fine. The first and foremost entry for subdivision entry, equity share capital account data. So face value 100, amount will be 10 lakhs, right? To equity share capital account, face value 10 rupees, amount also 10 lakhs. What happened actually being each share of rupees 100 divided into 10 rupees 10 each, divided into 10 shares of rupees 10 each. That's it. That is the narration. Next, come down. After subdivision, each shareholder shall surrender to the company 50% of his holding for the purpose of reissue to debenture holders and the trade payables as necessary. Whenever the equity shareholders surrender their shares, the entry equity share capital account debtor 50% of holding means 5 lakhs. That is number of shares were 50,000. 50,000 into 10, 5 lakhs. If you want, just you can mention in the bracket 50,000 number of shares at the rate of 10 each. To share surrender account, which was 5 lakhs. Fine. Next. Out of share surrendered, 10,000 shares of 10 rupees each shall be converted into 12% preference shares of rupees 10 each, fully paid up. This is altogether new point, sir. You not told this point while explaining the concept. This is not the new concept, yeah. What he is telling, in share surrender, all the equity shares are, all the shares are equity shares only. He is telling that out of 50,000 shares, we are converting 10,000 shares as preference shares. For example, if I convert, what will be the entry? Just I'm writing, no need to put because there is no impact here. Just check here. What is the entry if I put? First, what I should need to do to convert the equity shares into preference shares. First, again, I should need to cancel the share surrender and convert it into the equity share capital. Not for the entire amount, only for 10,000 shares. 10,000 into 10 means 1 lakh. Then what I should need to do, equity share capital to preference share capital at the time of conversion, 1 lakh. Then what I should need to do, preference share capital to share surrender account, 1 lakh. Now, what is the impact here? Consider it, all of you. Equity share capital cancel. Share surrender cancel. Preference share capital cancel. If I pass all these entries, the impact is also nil. Am I right or wrong? That's why you can imagine that out of the share surrender, 10,000 shares were preference shares, 40,000 shares were equity shares. This process was completed. This you can imagine, or if you want, you can pause as well. Nobody will object you. Share surrender to equity share capital, equity shares to preference share capital, then preference share to share surrender. So there is no impact. That's for time being I'm ignoring. But you can simply imagine that out of the share surrender, 10,000 were preference shares, 40,000 were equity shares. Do you agree, all of you? Fine. Next, come to point number 3. What someone is telling, sir, we do not have any internal groups. If you can help me in forming such group, it will be very helpful. I'm not responsible for that. Okay. I am also as like you. I don't know what really internally happened, how the procedure is. All such things were taken care by the ICA guys. I'm login at my point of time and log out. Nothing will know much more than that. But I can help you out one thing. Today, I'll try to contact the technical person. Okay, what is the issue? Let me check. Then I'll try to resolve that. Okay, that thing I can do it from my side. Okay, guys. Fine. That is point number 1 and point number 2. Hope you understand. This is for creation of share surrender. Now, come down. The claims of debenture holders shall be reduced by 75% in consideration of the reduction. Okay. The debenture holder shall receive preference shares of rupees 1 lakh which were converted out of the share surrendered. What is this issue is all about, sir? First, come to the debenture holders claims. 12% debentures is the capital and the accrued interest is also belongs to the debenture holder. Debenture holders claims means not only the capital, the interest accrued is also belongs to the debenture holders claims. Now, let me take up here first the total debenture holders claims. Debenture holders claim. Total how much? Capital 2 lakhs plus accrued interest was 24,000. So total was 2,24,000. Now out of which shall be reduced by 75%. Shall be reduced by 75% means sacrifice made by the debenture holders 75%. Can you please tell me in 2 lakhs 75% means 1,50,000 plus in 24,000 75% means how much? 18,000. So total sacrifice was 1,68,000. To sacrifice that in consideration of the reduction, sir, they are ready to reduce this 1,68,000. Just a second. Yeah. Sir, they are ready to sacrifice this 1,68,000 provided in consideration means to sacrifice this 1,68,000. They are expecting 1 lakh worth of preference shares which need to be issued by the company out of share surrender. Sir, that means which is the gross sacrifice or the net sacrifice. What about the remaining amount, sir? Remaining amount will be the liability. What is the remaining amount? 2,24,000 minus 1,68,000 means remaining will be the liability, which was 56,000. That is 50,000 plus 6,000. Shown in the balance sheet. That is different story. This is shown in the balance sheet. That is remaining balance. Now, which is the gross sacrifice? 1,68,000. Net sacrifice. How much, guys? Net sacrifice is 1,68,000 minus 1 lakh. 68,000 is the net sacrifice. Now concentrate. What are the entries, sir? Sir, now let me know how much amount you are utilizing for share surrender, sir. 1 lakh I am using. At the time of utilization of share surrender, entry is share surrender account debtor. Now preference share capital, not the equity share capital. The preference share capital was 12%. To 12% preference share capital. I am utilizing the 1 lakh only. That's great. That's good. Now, for the debenture holders claims, now I am talking about 12% debentures. 12% debentures account debtor. How much we are settling now? 1 lakh 50,000 is the capital. Accrued interest 18,000 we are cancelling to a reconstruction account. How much amount you actually utilized for share surrender? 1 lakh, in bracket 1 lakh, plus real sacrifice made by the debenture holders 68,000. That is plus 68,000. Total 1,68,000. Any confusion here, guys? The examples what I took, same manner. The third case, case number 3 is there, na? They are testing case number 3. This case number 3. In case number 3, what I told you, for this 2 lakhs, we are issuing 1,50,000 out of the share surrender. Remaining 50,000 they are ready to sacrifice. Provided 20,000 they are expecting out of the share surrender. Here also in the similar model, they are ready to sacrifice 1,68,000, but they're expecting 68,000 out of the share surrender. Do you understand? Sorry. 1,68,000 they're ready to sacrifice, but out of which 1 lakh they are expecting in the form of preference shares out of share surrender. Okay. Is it clear, guys, all of you? Sir, can you please repeat the preference shares point? No. You are for conversion, you are asking. This one you are asking for preference share point. For conversion, nothing is there, guys. Just put the same entry in such share surrender. 10,000 preference shares are there, 40,000 equity shares are there. But now, at the time of issue of such preference shares out of the share surrender to the debenture holders, first, how much amount you are utilizing the share surrender, you need to check. That is, we are utilizing the share surrender only for 1 lakh. That is share surrender to 12% preference share capital. If those are not preference shares, then we would write the 2 equity share capital. But it was clearly given that those were the preference shares. That's why I credited to preference share capital. Next, you should need to cancel the debenture holders claim for 12% debentures and accrued interest for these amounts. To that extent of utilization of share surrender transferred to reconstruction, and to that extent of amount of real sacrifice also you should need to transfer to reconstruction. Total amount will be 1,68,000. Hope this is clear. Let me continue further, guys. Trade payables claim shall be reduced to 50%. Now come to trade payables. 72,000 will be the trade payables. Put here trade payables. Trade payables 72,000. Now claim shall be reduced to 50% means 50% is ready to sacrifice. 50% is sacrifice. Remaining 50% is balance. Okay. It is to be settled by the issue of equity shares of rupees 10 each out of the share surrender. It is means this 50% is balance. We are settling. This is not consideration of sacrifice. For the balance, we are settling. For the balance, we are settling in the form of equity shares. This is like case number 2. Like case number 2. Can you please tell me all of you the journal entry? First, for utilization of share surrender entry. Share surrender account debtor to equity share capital account 36,000. This is for utilization of share surrender. Now trade payables cancellation entry. Trade payable account debtor total cancelling 72,000 to reconstruction account. For the purpose of utilization of share surrender 36,000 we are recognizing the profit. Now we are trade payables are for the purpose of utilization of share surrender we transfer 36,000 and a trade payable are sacrificed. Real sacrifice made by the trade payable was 50%. That 36,000 also I need to transfer to reconstruction. So total amount is 72,000. That's it, which is like case number 2. Hope you understand. Fine. Next, balance of profit and loss account to be written off. If it was mentioned or not, we need to write off. The share surrendered and not reissued shall be cancelled. Shall be cancelled means if still any balance is there under share surrender without utilization, then that balance we should need to make it transfer to whom? Reconstruction account. After transferring to the reconstruction account, we need to check the total balance of reconstruction. Then we should need to write off with the P&L. Still, if there is any balance in reconstruction, we can transfer to capital reserve. Let me put the flow first. Consider it, guys. Final stage. Final stage. What we need to check. Check the share surrender account. If any balance is there, transfer to reconstruction account. After transferring this, you can check the total balance of reconstruction account. Then with the total balance, you can need to set off the P&L account debit balance, or if any other things are mentioned. Then still, if there is any balance after knock off with the P&L account debit balance, that balance you can transfer with capital reserve. That is the flow. Now in this question, can you please check, all of you, share surrender account, how much balance is there? Quickly. In the first entry, there is no involvement of share surrender. Second entry, share surrender, we have 5 lakh credit. Third entry, minus 1 lakh. Fourth entry, nothing was involved in share surrender. Fifth entry, minus 36,000. So I have 3,64,000 in share surrender account. So the entry was share surrender account debtor to reconstruction account, 3,64,000. After transferring the balance of share surrender to the reconstruction, now I can check the balance of reconstruction. Please check from entry number 1, how much balance is there under reconstruction. In entry number 1, there is no balance in reconstruction. Entry number 2, there is no balance. Entry number 3, I mean, this total I can put it as 3. This here under reconstruction, we have 1,68,000. 1,68,000 plus. Here reconstruction 72,000 is there, plus 72,000. Now I transferred 3,64,000 plus 3,64,000. So the total balance under reconstruction was 6,04,000. Now out of this 6,04,000, I need to cancel the P&L account debit balance, which was given how much? 6 lakhs. The remaining 4,000 I can transfer to capital reserve. So entry reconstruction account debtor 6,04,000 to P&L account debit balance 6 lakhs to capital reserve 4,000. Am I right, guys? Can you please tell me, all of you? Mr. Karthik is asking again another question. Please let me read the question first. Sir, in point 4 and point 5, I think so you're asking about this question only. Point number 4 and point number 5. Why we interpreted the words reduced to differently? In the former, the not reduced part is carried in the balance sheet, and in later, we assumed it to be sacrificed by the trade payable. Facing some ambiguity is constructing the facts given in the question. No, you need to understand one thing here. Here they are using the word reduced by. Reduced by means to the extent of 75% they are sacrificed. Here reduced to means the existing balance was 50% and the remaining balance was 50%. Yes, why they are giving like this? Sometimes in the examination, what the students they will do, they are not checking by and to. Just they are okay. 75% na here also by na, they are also interpret that this is also by. Here it was given 50%. If you interpret it as by or to, the answer doesn't change. But if something it is given that reduced to 40% is like that, then if you assume it as a by, then the answer may be different. Hope you understand. Okay. I think so. You are talking about that one only. Am I right? Fine. Is it understand, guys? Everyone, regarding the surrender of shares concept? Nothing is great. Just if you follow simply the concept, then you can get it everything. I'll give you one HW problem for you. Please, all of you, complete the HW problem. The problem is problem number. I ignored one problem now here. Yeah, problem number 4. First, I take up for the discussion. Again, I ignore. Please, all of you complete the HW for problem number 4. Okay, for your better understanding whether you can able to recollect all such things or not. But the chapter is pretty much easy, guys. we are unable to resolve each and every problem. I do know due to the time constraint, but the problems which we taken for the discussion, just believe me, in such problems, I'll try to cover each and every concept. Okay. So still, if you have any doubt, I already provided my mail ID to you. You can reach out at any point of time. Okay. And after completion of my sessions, I will provide one more thing, guys. My entire materials I'm going to upload, not only these chapters. So like this, I have my entire material. Okay. It was very much strategically defined and arranged everything, the order and the accounting standards. Also, if you see, then you can interpret each and everything. This notes is there now. This notes is there. If you read, you can understand. But if you're already listen to my classes or habituated to my material, 100% you can understand. But sometimes what will happen now? This is looking like a classroom notes. So in mind, something will be there. With that, we are putting these words. This notes also I'm uploading. The reason is it is highly useful at the time of revision. You can revise by seeing the entire notes for the entire accounting or the advanced accounting, whatever the case maybe. You can revise entire thing within 4 to 5 hours. That much of command you may will get once after completion of 2 to 3 revisions before going to the examination. Okay, this is all about internal reconstruction, guys. From the next session onwards, we are going to start with liquidation of companies chapter. That is much more interesting. Even though the chapter is lengthy, I will give more focus on important issues along with the other issues also I will discuss. Okay, guys. Bye-bye. Have a nice day.